Earlier this week, Cypriot authorities agreed to sell their gold reserves to raise cash for the bailout. We were just hearing about it there. Now, that news helped to send gold to its biggest fall in 5 months, but really, the 400 million euros they've got dollars worth is small fry. What's really got gold investors nervous are minutes of the latest US Federal Reserve meeting, which suggest appetite for quantitative easing, printing money, could be on the way out. Now, that has helped the gold price rocket to nearly $1,900 per ounce in 2011. Since then, it's fallen back nearly 20%. Is it the end of a golden era? Well, Detlef Schlichter is economist and author of Paper Money Collapse, The Folly of Elastic Money and the Coming Monetary Breakdown. And Tom Kendall is Global Head of Precious Metals at Credit Suisse. Good morning to you both. Tom, first of all, quick look at the reason gold has gone up. Simply, if you print more dollars, you need more of them to buy the same amount of gold. That's what's happened. That is, in fact, is its appeal.
Good morning, Simon. Yeah, that's part of it in simplistic terms. But you know, the genesis of that strong rally in the gold market was really the credit crisis, which then spiraled, of course, into the global financial crisis, which had a profound effect on real interest rates, a profound effect on asset prices of all kinds. And then we were into the phase of massive central bank policy efforts to reflate the global economy. But what's important for gold, I think, here is the direction of travel. The direction of travel of global markets and the economy. Things were clearly getting worse through 2008 to 2011. Now, although we are not out the woods by any stretch, it appears that things are indeed getting better, and that's not good news for gold.
Detlef, if QE slows down, if you don't need to print so much money and we're coming out of the woods, so does gold. Simple. Not only that, but all the fear factors that push gold up are also beginning to subside.
I agree that, if indeed we see a change in monetary policy globally, that could be a problem for gold. I don't think we see that change, though. There is talk in the Fed about maybe slowing the purchases down, but that debate has now been moved to the summer. We see other central banks that are actually printing more money. You look at Japan right now, which is basically throwing any caution to the wind and has a plan to drastically expand their central bank balance sheet over the next 2 years. We know recently Mervyn King at the Bank of England voted for more quantitative easing, when none of the major central banks has reduced the size of their balance sheet, well, maybe with the exception of the ECB lately, since 2007, 2008. None of these central banks, I think, has an exit strategy. They don't know how to get out of this. I think we will see a continuation of quantitative easing, and that will ultimately support gold.
Okay, so you accept that if QE does stop, then gold's got a problem. You just don't accept that QE is going to stop anytime.
That is correct.
Okay, Tom, what about you said that gold may be losing its luster a bit. What happens if tensions ratchet up in North and South Korea? Presumably that means that gold keeps its attraction.
Yeah, of course, geopolitical events, North Korea in the front of people's minds at the moment, always can spark a reaction in the gold market, but they tend to be fairly short-lived reactions. And if you're an investor looking for somewhere to put your money to earn a yield, then when you look at the performance of the equity markets recently, for example, gold doesn't look particularly attractive in comparison.
Well, I just wonder, Detlef, you're a gold bug or gold bull, as they call them. Why does gold matter? You can't eat it. It's got no real commercial value. Why is it worth anything at all?
Well, I would say gold is money. It has been money for thousands of years, and I think it had always played an important role in putting certain restrictions and limits on our financial system, on borrowing, on bank credit expansion. Remember that, even up to 1971, the global financial system had a link to gold via the US dollar, which was up to 1971 exchangeable for global central banks in gold at a fixed rate. That changed in 1971 for political reasons. And so for the last 40 years, for the very first time in human history, we have the entire world without any constraint on money creation. And that has, in fact, caused the problems we're in right now.